To point out, again, for what it's worth, the 2-year, 10-year yield curve continues to steepen. It's up about 10.5 basis points, and the 2-year yield is going back towards session lows here. Vahan, I want to bring you in because one of the eyebrow raisers for me is the fact that the minutes basically said the Fed would have hiked by 0.5 point last meeting if not for the Ukraine invasion. That is quite a dramatic statement for investors to digest.
Yeah, Kelly, I'm actually quite relieved by the minutes today because they're not being as aggressive as many feared. One of my major concerns is that the inflation that we're currently seeing is really due to two things. One is the supply chain constraints, and of course, those are getting worse because of Russia's invasion of Ukraine. And the other was because of the massive amounts of fiscal stimulus, which is pretty much coming to an end anyway. So I'm not really sure that by raising interest rates, the Fed is going to be able to address inflation caused by supply constraints, and it even needs to address inflation caused by fiscal stimulus since that's ending. The Fed definitely needs to raise interest rates, and it does need to reduce the size of its balance sheet. But I think it does not need to be much more aggressive than we originally expected.
Let's bring in Bill Nelson. He's the chief economist at the Bank Policy Institute. Bill, you're hearing from everybody here so far that the fears may be over-exaggerated going into the minutes here. We're looking at the stock market back down, the Dow down 214 right now. So the Dow is having maybe a rethink of this in the first couple of minutes. What are you thinking short term, and then what are you thinking in terms of the Fed's goals going forward over the long term next quarter or so?
So thanks for having me on. I sounds like the minutes are pretty much on expectation. Over the medium term, and now looks like over the short term, and now looks like a 50 basis point hike is pretty certain for May. That said, the communications around the hike could be actually a bit on the dovish side. Chair Powell has to balance the view, a quite divided committee, and he often does so by playing off the hike versus the communications. So that process will probably continue with 50 basis points in May. They could be talking about being firmly committed to avoiding a recession pretty soon, because pretty soon it's going to be necessary for the Fed to make sure that they're convincing everyone that 25 basis point hikes remain on the table.
Yeah, I think people are contending, Bill, with the cross currents of recession or slowness now, recession or slowness later if the Fed has to get more aggressive. Let's bring Steve Leisman back in on that note, Steve, as we watch the Dow now sinking back towards session lows. It's down 259 points.
Yeah, I mean, two things. One thing I should clarify, these decisions have not strictly been taken. They were generally agreed. The Fed has to take these decisions in May. I should have clarified that at the top, just to be clear. More importantly, though, these are exactly, as Bill Nelson said, in line with the new expectations we got at 10:05 yesterday. And I'd ask you to put up a chart of from the Tuesday speech of the 10-year at 10:05, and you'll see that we're still well above that level, that the market has now priced in a more aggressive Fed, and what happened is clear now. Lael Brainerd and Fed Chair Powell felt a need to give the market a heads up on what was coming today, to give it a few days to process it, and they have pretty much delivered as Brainerd suggested. And I'll tell you why. Because going into this meeting, all of our surveys had the Fed run off at about $70 to $80 billion. What they've done now is they've ramped that up another, say, $15 billion. They're going to get to the caps perhaps more quickly than markets expected. So there is new information the market has processed, new information about a fairly hawkish Fed. I would not see these minutes as dovish in any way, shape, or form. The Fed is mapping out one of the most aggressive tightening cycles since at least 1994, and maybe Bill will tell me if this one is more hawkish than that.
Shepard Smith here. Thanks for watching CNBC on YouTube.